Generally accepted accounting principles could be described as the holy books of the accounting profession in Canada. And that's true for the rest of the world as well.
So effectively, there are three different reporting standards for Canadian businesses. I'm not an assurance specialist, but as I recall, IFRS was adopted in Canada around 2010. As you can see in the outline to the CPA handbook, it's been updated every year since it was introduced. As I said, I'm not an assurance guy, but from my perspective, that looks a lot like feather bedding for audit practitioners.
The Canadian Standard on Related Services, also known as CSRS 4200, is a new standard introduced by CPA Canada in 2021. According to CPA Canada,
it updates and strengthens the requirements and guidance for accepting, conducting, and reporting on compilation engagements. The standard became effective for compiled financial information for periods ending on or after December 14, 2021.
More cynically, it imposes a new standard for accounting services done in support of income tax compliance, in particular for our smallest businesses. This is an area where Revenue Canada is solely responsible for developing tax basis reporting requirements. This will either increase the cost for small businesses, or reduce the profitability and efficiency of small firms providing those services. With the introduction of the new compilation standard, CPA practitioners must prepare financial statements in accordance with one of the three allowable standards, as well as the tax basis reporting mandated by Revenue Canada.
Does this better serve the interests of Revenue Canada or the practitioner's small business clients?
When people interpret the Income Tax Act, they're required to either look to the Act itself for definitions, or if the definition isn't found in the Act, they look to the ordinary meaning of words. It's also referred to as the plain meaning rule. So we'll find that things like profit, asset, expense aren't actually defined in the Income Tax Act, and they don't point to generally accepted accounting principles of any flavor. So essentially what they're relying on is the ordinary meaning of words understood by the public as a whole, without reliance necessarily on the accounting profession. The theory is that it's important to have all entities use the same consistent financial reporting standard for all businesses. However, that may not actually be true. That assumes that investors, lenders, and other users need to rely on accurate, audited financial statements before making investment or other lending or similar decisions. For example, the Canada Revenue Agency relies on definitions in the Income Tax Act and not GAAP of any flavor. Lenders often look to guarantees or the assignment of assets or as security when lending. Most retail investors rely on investment advisors to tell them, or just as likely on rumors or hunches they generate themselves by reading the business press. Sophisticated investors and venture capitalists will often take a much deeper dive into the financial information provided to them. They'll often kick the tires themselves and consider audited financial information just as useful supporting information, if that.
Why did it take Mazars more than 10 years to withdraw their audit opinion on the financials of the Trump Organization? When did it become apparent to Mazars that former US President Donald Trump was sometimes less than honest?
According to the U.S. Small Business Administration, there were 31.7 million businesses in the United States in 2020. But the number of publicly listed companies in the U.S. has been declining since about 1997. In 2020, there were between 4,100 and 4,400 publicly traded companies in the US. Any way you slice it, that's not very many.
A significant part of the complexity around assurance work involves rules for consolidating the financial information of related economic entities. When accountants prepare tax returns, economic entities aren't relevant. Corporate tax relates to legal entities. In the same way, lenders and investors may also be more interested in a single legal entity. Another important source of complexity are the detailed note disclosures required on assurance engagements. It is difficult to know how well these disclosures are understood by users. What's more, auditors still rely on management to disclose relevant facts that affect financial statements. An audit is not a guarantee of accuracy, and auditors are not charged with uncovering fraud. For the most part, large public companies listed on the world's major stock exchanges do benefit from the confidence that society places on their audited financial statements. However, the accounting profession could do a better job of meeting the needs of small business. In particular, the training of accounting professionals should pay more attention to the particular needs of small business. At SBA Canada, we see accounting for small business as an area of specialization. Small business has needs that are markedly different than the needs of our largest global corporations. We invite our profession and our colleges and universities to embrace that reality. We invite them to collaborate in building and delivering a more relevant curriculum for accounting professionals serving small business.